So I think crypto lost its tracking to gold because of...
Which is why we've had this choppy sideways price action for a long time while other assets have been screaming to new highs. And you've taken out a bunch of retail investors and broken their hopes and dreams.
The number of dolphin holders, 1,000 to 5,000 ICP, hitting an all-time high. Here's Chainlink, total value secured, all-time high. This is Elliot from the Early Stage Investor. On this channel, our mission is life-changing returns. Let's dive into the question on everyone's mind. Why is Bitcoin in black massively underperforming gold? Well, first let's hear from Tom Lee on this question.
Why did crypto not perform last year in a way that gold did?
So crypto was outperforming and keeping up with gold until October 10th. And on October, Bitcoin, for instance, was up 36% and Ethereum was up 45%. So Ethereum was outperforming silver. But on October 10th was the single largest deleveraging event in the history of crypto, bigger than what happened in November 2022 around FTX. And after that, Bitcoin lost more than 35% of its value and Ethereum fell almost 50%. So I think crypto lost its tracking to gold because of deleveraging within crypto. Crypto has periodic deleveraging events. It really impairs the market makers, and the market makers are essentially the central bank of crypto. So many of the market makers, I would say maybe half, got wiped out on October 10th. Until we get to the day where crypto is widely mainstream supported by institutional investors, the internal deleveraging events knock it out of the sky.
So half the market makers in crypto got wiped out on October 10th. So it's going to take time to recover from that. Here's the chart of ICP, what it did. Starting on October 10, it was $4.50. It's been hit, right? So what we've seen is just systematic selling in all assets, obviously not just Bitcoin. Here's a chart of Chainlink on October 10, just got whacked down, right? So there's been relentless selling pressure. That is why Tom Lee is saying the crypto market has just completely derailed ever since October 10. Here's Bitcoin. On October 10, it diverged and we've just been down, right? So I consider this an unreal opportunity to buy more. I know it's painful. I know you've been waiting for a long time. If that deleveraging event didn't happen and if half the market makers didn't get wiped out, then we'd be pumping with smaller cap assets, which are starting to break out. As we talked about, we're very similar to 2020. We have to dive into that. But first, here's Raoul Pal's take on why crypto has not outperformed or even matched gold's performance. Very exciting what comes next.
Then we had the shutdown. Nobody expected the longest shutdown in history. Certainly I didn't. And what you got was a decoupling of crypto, which is the furthest end of the risk curve, because it got hit by this lack of liquidity because nobody could spend any money in the government, so liquidity wasn't there. That caused October the 10th. October the 10th was a crypto-specific event where everything broke basically on Binance and a few of the Asian exchanges, and everybody got liquidated in the largest liquidation event in history, and the market has not recovered from that yet. There's a bunch of theses why it hasn't recovered yet, but it's repairing itself, which is why we've had this choppy sideways price action for a long time while other assets have been screaming to new highs. Does it mean that it's over and the 4-year cycle's over? No, because we can actually forecast liquidity. We do it a number of ways. Looking at global liquidity, we know it's going to go up. We also know that the interest payments on the debt are still going vertical, so we can tell how much they have to roll. And they've got about 8 trillion to roll this year. So somehow you need to find 8 trillion.
Do you feel like 1010 caused maybe everlasting psychological damage in the market, man? That was the biggest crypto liquidation ever.
We've had similar in the equity market. It was called the flash crash in 2014, I think it was. And big stocks traded down 80% in like 3 minutes. Yeah. Exactly the same mechanism. It just takes a while. My view is the exchanges, Binance and others, had to step in with their own balance sheets to stop the market completely going to zero through their own, the failure of their own platform. But let's say they had to chuck in $10 billion to absorb all of that selling. Okay, now they've got $10 billion of inventory. What do they need to do? They'll need to offload the risk. But you've got a bunch of coins, you've got a bunch of everything in that, and some of this stuff is not liquid at all. And you've taken out a bunch of retail investors and broken their hopes and dreams. So it's going to take a while for them to try and sell that and repair their own balance sheet.
So that's his take. Again, they line up very well, and that is most likely what happened. We're getting systematic selling from market makers. It's just bad luck at this point, really. Well, also, we're an incredibly early stage market. That's where the opportunity is. If we had the New York Stock Exchange fulfilling all these orders, then we wouldn't have all the market makers bleeding right now. The market's going to be 100 times bigger when that happens, and there's not going to be as much life-changing upside in it. So right now, the market, again, we're in the Nevada desert before Las Vegas was built. There's nothing. There's a ghost town. So we're relying on a few exchanges to hold the entire market up. But what Raoul Pal just said is he had another indicator about why we're in a very similar time to 2020. I remember 2020 very well. It all came back to me recently. I was like, oh my gosh, this is deja vu. So if you want a deep dive into why we're in a situation very similar to 2020, you can watch this video, but also look at this chart. This is the Federal Reserve's interest rate. It was coming down back in 2020. It's coming down now, but it's not fast enough. It's nowhere near fast enough. What are some more parallels? Well, gold was pumping in 2020, crypto was doing absolutely nothing. We had the vicious sell-off in 2018. Bitcoin was slowly languishing. It was not catching up to the rest of the market. Everyone, retail traders want silver, they want gold, they want tech stocks. No one is interested in crypto. That is an unbelievable bull signal. So here's the chart of the GDXJ. I remember this because I was tracking the GDXJ in 2020. So in 2019, GDXJ went from $30 up to like $40, and people were very bullish gold back then. But then, of course, we got that massive black swan pandemic event. Yes, that was a pandemic, but yes, people were super levered long. So we got a huge liquidation, and people are very levered long it now, right? But I do remember retail traders snubbing crypto. No one wanted crypto in 2020. They were looking at things like gold miners. And guess what? Gold miners are running now. So again, interest rates are doing the same thing. The stock market is doing the same thing. Gold miners are bullish again. Here is the Russell 2000 index, small cap stocks after 5 years, finally breaking through resistance. It was 2,300 in 2021. Now it's 2,653. So it's slowly starting to break out, right? We've been talking about how the real economy has been just languishing for 5 straight years. That's why crypto hasn't gotten a bid, because interest rates have been too high. So the Russell 2000 slowly starting to break out. That is very bullish for risk on assets. Here's a chart of copper, right? Talk about the industrial economy finally waking up. Here it is in April 2021, $4.50. Now it's finally about to hit $6. So again, we're seeing the real economy start to wake up. All these old industries lead crypto. And in my video where we dived into why we're in a similar situation in 2020, we talk about how the stock market is doing the exact same thing. So back then, the stock market was making a very similar pattern to now, but then it pumped. Here's the NASDAQ 100 QQQ series. We can see this. If we do continue following the exact same pattern, we can see this pump up to like $700 in what I call a blow off top, right? We're seeing liquidity enter earlier stage markets. The stock market rally is broadening out. Where does that all lead eventually? It leads straight into the earliest stage assets, crypto, blockchain assets. Now, we mentioned copper. In orange, we see the price of Bitcoin. In yellow, we see the copper to gold ratio. Why is copper important? It's an industrial metal. It's not a precious metal. So when the copper to gold ratio breaks out, when it goes up, what happens every single time? Bitcoin goes up, crypto goes up, altcoins go up. Look at what's been happening. Everyone hates altcoins right now when really altcoins are just tied to the economy. The same reason copper has been lagging for 5 years, and the same reason the copper to gold ratio has been lagging for 5 years is the same reason revolutionary blockchain assets have been lagging. Everyone at this point understands the fundamentals of blockchain. Most people understand how important the tokenization of the entire multi-hundred trillion dollars of world's wealth is going to be, and how the blockchain infrastructure of the world is going to benefit from that, and how ICP went deflationary, and how Chainlink is going to make billions of dollars in revenue. Most people at this point understand that, but what most people don't understand is the price action. Well, this chart says everything. The copper to gold ratio has been low. Bitcoin has underperformed. Everything has underperformed, especially the undiscovered altcoins. And we had a massive liquidation event on 10/10, right? That did not help. So when you understand what's going on, it's very exciting because we understand why our assets are falling and we understand why they can absolutely skyrocket and make us life-changing returns. We've been here before. Again, we started this channel talking about gold and uranium when literally no one wanted them. Now they're ripping. It just takes time. We live in this pain zone on this channel, though, right? So we're similar to 2020. What happened in 2020? Again, I showed you the interest rate chart. Rates were falling. But here's what's happening to interest rates. Again, interest rates are the oxygen of the financial system. Here we see the 10-year bond yield skyrocketing. This is like mortgage yield. So try flipping a house right now. Try borrowing money from a bank and flipping a house right now. Try refinancing your debt right now. The housing market is super weak. And as we've talked about, the industrial economy is super weak. Venture capital, early stage assets. There's very little capital in this space. Capital has been concentrated in the top 7 companies because they were deemed by the market to be almost risk-free. So early stage, risky assets like altcoins have been miserable. And that's because this line has gone up, because this line is the wrecking ball for liquidity. So what happens next? Well, what we can see happen is, again, stock market rally, gold continues to rally, small cap stocks continue to rally, but unfortunately, this line also rallies. As the economy grows and money moves away from bonds into risk assets, this line pumps. So the last time we had a pump in crypto, this line did this, right? The end of 2024, early 2025, we had Solana AI agents pumping. It was meme season. ICP was absolutely ripping. Chainlink was absolutely ripping. But this line went up. And guess what? As soon as it went up, it pricked the bubble. So again, what I've been calling for is a blow off top. Risk assets, retail gets suckered in. But this line, yields go up and that pops the bubble. So that is one reason why we could get a massive sell-off after a blow off top, right? The market's broadening out into earlier stage assets. We could get a pump, blow off top in stocks, gold, small cap stocks, maybe even crypto gets a bid. But then we get a massive black swan because yields are too high. The Fed is preparing to sell US dollars, buy Japanese yen for the first time this century. Darius Dale says this is confirmation that the Japanese bond market, if that goes belly up, the US Treasury market is next. We're seeing a rising in yields. This is the most dangerous setup imaginable. And we're seeing retail traders take on maximum margin debt at potentially the worst time, chasing small cap stocks. Now, this bull market could take months. What I don't know at all is the timing. But what I do know is a massive flash crash is on the horizon if this continues to rise. And there's lots of major warning signs that the market is at risk. This was shared by Chamath of the All In podcast. Here is Oracle credit default swap. So Oracle is a multi-$100 billion massive company. And it benefited from the AI trade, right? OpenAI committed hundreds of billions of dollars to Oracle. Well, look at what's happening to its debt. The higher this goes, the less the market trusts Oracle's financials. So this was the global financial crisis. That was the first spike. Then the pandemic was the next spike. Look at where we are now. Again, that mirrors 2020. If a company like Oracle, which is worth hundreds of billions of dollars and had commitments of $300 billion from OpenAI, is melting down in the financial markets, then what does that say for the AI narrative? What does that say for the amount of faith being placed in OpenAI? It means cracks are beginning to form in even big cap tech, and big cap tech was carrying markets, right? So this is all happening behind the scenes. Gold, everyone's chasing gold, gold miners, small cap stocks starting to break out, even copper, people are getting bullish copper. But behind the scenes, cracks are forming in the biggest AI trade on the planet. So I can see whales slowly start to sell into retail as retail chases these moves, right? So again, blow off top, retail chases, whales dump, massive liquidation event in all assets. We cannot get a bull run when interest rates are skyrocketing. It's impossible. So just like 2020, we need an excuse for the Fed to lower interest rates. What is Donald Trump's Fed chair going to do the second they get in? They're not going to be able to lower interest rates to zero. So they're going to need an excuse to lower those rates down to zero. That always comes from a massive meltdown, and it could very well be the popping of the AI bubble. This is David Rosenberg. This is his take on markets.
Incomes are in a recession. And then what about the job market? Like, what am I missing here? Do you know that we closed the year with non-farm payroll growth year over year up 0.3%? Almost no growth in employment. And all I hear is about the economic boom. And we have no growth in employment. 83% of the employment base in the United States contracted last year, which, by the way, has never happened without the economy going into recession. But if you look at GDP, which is spending, well, there's no recession. There's something going on here. We have basically, if you want to talk to me about the economy and say to me, I don't see any fragility. Yeah, so let's just call it jobless and incomeless prosperity. How about that?
So the economic data, as crypto investors can imagine, is not ideal, right? Again, we're tied to the real economy, small businesses, early stage VC, and that economy is really struggling right now. So again, yet another reason why we could hit just a wall. Like he said, we're in situations which are very similar to recessions. And what do recessions do? They cause stock market crashes and they cause interest rates to come down. That would be a dream for the federal government because that would give them the cover they need to crash interest rates and do what? Cause a massive rally in Bitcoin, just like the time it went from 3K to 69K. The scary point of that for early stage crypto investors, altcoin investors, is we could get a flash crash down. So just be prepared, raise some cash. Again, we expect a blow off top. We expect all assets to pump. Hopefully, crypto can recover from its October 10 meltdown in time for a potential blow off top to sucker retail in before its crash. But if not, we could just get a bleeding down in crypto assets. So why is it even worth staying on top of these assets, right? Well, first of all, here's the Bitcoin to silver ratio. Right now, Bitcoin is melting down against silver, but guess what? It's happened over and over and over and over and over again. And we got massive rallies over and over and over and over again. So that is no problem. Usually, if you were to buy when Bitcoin was melting down against silver, you would make life-changing returns in Bitcoin. Cryptocurrency, a $3.2 trillion asset class. Gold, $35 trillion. Global stocks, $143 trillion. We have so much room to grow. So if you believe in the fundamentals and the entire economy is going to be tokenized, then you want to be diving into these assets as we get flash crashes down. Caffeine AI, since October 15th, 3.8 million people visited Caffeine AI. One user prompted caffeine over 5,500 times. Across all users, you spent 21,000 days using caffeine. 2026 is going to be huge. We're getting adoption of some of these revolutionary assets. Caffeine AI is a AI automatic software writing tool on ICP. No other blockchain on the planet is doing that. ICP posts largest daily token burn since September 2025, topping 20K. We're getting usage even in these markets. We're getting adoption. The community is growing. This is what impresses me so much about ICP. The number of dolphin holders, 1,000 to 5,000 ICP, hitting an all-time high. The ICP community is its powerhouse. This is why I think we're going to get a massive return like Cardano back in 2020, right? It always goes back to 2020. Cardano crashed down to 2 cents. It did a more than 100x. I think the power of ICP, the narrative, the tech, can send it to 100x. Here's Chainlink, total value secured, all-time high. Price has not reached an all-time high yet. And we talk about the fundamentals of Chainlink all the time on this channel. But what the point is, the fundamentals have never been better for altcoins. So it's just a matter of pain tolerance. Again, I remember it would have been very, very difficult to have held altcoins through 2019, through 2020, and then that last flash crash would have been impossible, right? So ICP could hit $1.80, Chainlink could hit $8 or $7, followed by a massive bull run when the macro situation finally shifts after 4 years. If you want to reach out to me and ask any questions, you can DM me on Patreon. Appreciate you. We're going to get there and make this life-changing return. Just got to get through this market, which again, we understand why it's doing what it's doing, and we understand why the upside could potentially be seriously life-changing.